Inflation continues to come off its peak, although it remains a slow process. Yahoo Finance senior columnist Rick Newman is here with a look at a few things that may be poised to get cheaper in 2023. Rick, tell me it's eggs, right?
No, it's not eggs. I'm sorry about that. Food is actually one of the things that may not get cheaper over 2023. We've got just a couple of factors pushing food prices up. Fertilizer prices are stubbornly high. Diesel fuel prices are stubbornly high. Not sure we're going to get any relief on those two things. So food may not come down, but a bunch of other things may come down in price in 2023. You're seeing a list of them there on the screen. Home prices are already declining on a month-to-month basis. That will probably continue into 2023. Rent will probably follow. And then cars and appliances, other things that depend on semiconductors. The chip shortage has been easing. So inflation did pound consumers in 2022. They're going to get some relief in 2023.
Are they expected to buy the things as they get cheaper?
They've been buying them anyway. I mean, that's one of the reasons inflation has been going up in these categories. So it's been a combination in 2022. It's been a combo of people do have the money to spend. I mean, one astonishing fact is that the average price of a new car in the United States is now around $48,000. I mean, that has soared during the last 2 years. And that's because automakers have not been able to produce enough cars because of the chip shortage, but consumers are still buying. So that has just done what happens in a free market, which has pushed the prices way up. So we're going to get more inventory in 2023. I think the biggest change in the car market is not going to be new car prices, which might come down a little bit. It's going to be used cars, which are probably going to come down in price by a lot. We saw insane inflation in used cars. It hit around 41% year over year early in 2022. That was a year ago. And that is going to reverse. We could even end up with a big glut of used cars by the middle or end of 2023. So there will be some deals there.
And then there is the biggest ticket thing, right, for most people, if not everyone, and that has to do with where you live, right? And this is also something the Fed has been watching really, really closely, whether it's rents or housing that people are buying.
Right. So it is a catch-22 in the housing market right now. Prices have begun to decline, but of course, mortgage rates have gone up. So rising mortgage rates is one of the reasons that home purchases have cooled off and prices are coming back down, because affordability is actually terrible right now. But this is going to stabilize. It could take a while. I mean, we may not get to a fully stabilized housing market this year, but we're going to see the trend in that direction. And prices are going to come down. We're already seeing the trend. And then when they sort of hit a sort of stable level, by then there's a good chance the Fed will be done raising interest rates. So interest rates and mortgage rates will stabilize. And then who knows what will happen? I mean, if we get a recession, it's possible the Fed will cut rates and mortgage rates will come down. But we are definitely going to get back to a more normal housing market rather than this crazy run up in prices we've seen during the last 2 years.